Yo, I won't subject you to too much Rocky. This is True Crypto 28, Mr. Anderson from Twitter. Did you see that little flash that just happened right there on my screen? This is exactly why this is not a live stream. Unbelievable what's going on here. I'm like cursed in my internet ways here. I've had Comcast out every single day, and I can't even be that upset with them because basically I see them changing. They've changed the lines on the wall. They went up. I could watch them going down the road, changing amplifiers, doing everything you could imagine. So it's just some funky, weird thing that's going on. Today's actually worse than usual, but it was getting a little bit better. But it just creates an issue to where if I do a live stream, the recording still comes out well, but you saw that little flash. It basically breaks the little bit of the bridge that we have, the bridge connection for the live stream. And then you guys are getting a disruption that lasts a little bit longer and becomes a headache. So I'm rambling on for no reason, and it causes an issue. So as soon as that's done, I'll be back to regular live streams. I apologize for that aspect, but that little flash at least allowed me to show you guys what I'm dealing with. Anyway, hopefully everyone's good. I'm good. Carnage, right? We got carnage everywhere. We'll talk a little bit about that. Talk about what a black swan and white swan event can really do. We're kind of seeing it. I mean, there's no safety, right? When all hell is coming and everything's burning, there is no flight to safety issue. I'm not saying that's exactly what's going on with crypto or with Bitcoin. You'll never. I'm literally the last guy to talk about why something's happening. Meaning, I'm always into the charts above everything else. But obviously, you have to acknowledge when there's an issue. So I mean, these are certainly issues related to the fact that, hey, by the way, you're going to have a global slowdown, so everyone's selling everything, and you just have situations to where uh, the so-called hedge funds, right? I'm doing air quotes over here. Hedge funds are the last thing they are is hedged. They basically will find themselves a nice little formula. They'll leverage that formula up about 10x and roll with it, and it's all great when it's working out, but then God forbid something happens, they're the first ones to panic sell and dump. So you get a little bit of a overkill on that. Not to say that this is overkill because we just don't know that. We just need time. Time always plays a factor, right? And you have these issues that occur where if you move too quickly, a lot of people think like, oh, you move too quickly, you're oversold. No, 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 no. If you move too quickly, in fact, that creates further selling, right? So that's the issue. So when things go down very, very quickly, sometimes you don't create an oversold. You go a little bit past that extension there, and you just create a deep, dark downtrend, right? So I mean, it's hard to explain. Obviously, we could probably spend 2 hours kind of explaining that in detail. But when you truly understand trading, something like that will make a lot more sense. Where it's, hey, you know what? You're not oversold. You're in a deep spiral, and you need time to play its factor, and then over time, it can become oversold. Probably more complicated hearing it that way actually than anything. So maybe dismiss that for a moment. But no worries, no worries at all. Let's just get into a couple things. All right. So first and foremost, what we talked about in the last stream here, we're actually focusing on these two red lines here, right? So if you can't see them, let me try to make it a little bit bigger. These two red lines, and we were talking about the fact that hey, things were a little bit complicated in that let's give things its due respect that they were trying to fight for this level. What level was that? Things were looking a little bit different. Obviously, just a couple days ago, we said, all right, look bearish. Bears have done a great job, but it's really like right in here. And the idea was like, look, they are trying to fight for it a little bit. They did give that little bit of a last dashed hope that was rejected, and then it dumped out. But the idea was, we said, look, this particular level needed to hold. And the moment that we lost it on H4, it was over. And it did work out that way. I mean, the moment they were both lost, we had the same double region here. Of course, the show was over. The moment one of them was lost, it gave you a little bit of a fake out to the other side and then dump through, etc. So on that aspect, we had the right level pointed out. I'm sure many people did. So I'm not saying it like it was some type of grand thought process or anything along those lines. This one was a little bit better. Now, this is something we talked about on Discord in detail with my members. Sorry, I did the old cough button there, but what we did speak about was this the other day. So we seen this, and on a daily scale, we suddenly came up with this bullish engulfing, right? So you had a little bit of a bullish engulfing, and it was actually intraday before it had closed. But we said, look, we got to respect this, that you did come up, right? This is before any lower lows, right? And you basically put yourself into a position to where you stepped it up a little bit. Nice little pullback, yes, but this is a decent candle, bullish engulfing that followed it. And what we stated at that time, which is why this is drawn out here, was like, all right, we're going to do a double play on this, right? So the double play was pretty simple. We'll respect this guy, look for some long entries, and this type of, what happens is that this level should hold in that situation, right? But the moment that it breaks, we're now short. It's a failure pattern, right? Because what should happen when this type of scenario occurs is you should work your way and grind your way up to a higher high. It could be slow. It doesn't have to be fast. It doesn't matter how long it takes. But that's basically what should occur. And you'll see that over and over and over again if you went through a chart. I'm not going to go through it here, but we could basically draw these type of things over and over and over again, and you'll see it occur. And then if you lose them, that's the beauty of this particular play, which is what we discussed, because it then gives you the other side of the coin. And look, there's no binary, right? So I mean, doesn't mean that either one of them will work necessarily, but if you do it 100 times, you can do pretty well, right? And of course, it takes a lot of time to learn this technique anyway, so you're not just going to go and roll and pick out the right spots, because that does take time. But first of all, I know a lot of you guys, most of you guys actually aren't on Discord. That's a private community, so let me just point it out, so don't think that we're just playing make shit up here. All right, see this here? This is February 18th. Okay, so this is the exact spot that I'm talking about, where we said, all right, February 18th, this is what we drew, and we had this dotted line because that was the play specifically. Everyone on Discord can vouch for that. And then, of course, the idea was what? It now becomes resistance. So while fighting for this level, which it was trying to put in its good fight, and things were definitely confusing here, it then rejected that area exactly as we discussed, bearish engulfing. At this point, this thing's gone for the most part. But again, we still want to wait it out. Let's look at it on the 4-hour to see how that looks. Any crosses you see beyond that are just wicks on the daily, so don't worry. Same type of thing. And then look at that. That's a exhaustion candle, lower low. This is all very normal behavior. I mean, on the daily, you can see it's daily scale action too, because of the way it works. You bearish engulfing, you get your backfill, dump side again. So, and then it just became ugly. Let's look at something like as simple as Heikin Ashi, right? Look at the 4-hour Heikin Ashi. Look at this. What is it? 19, 20 candles in a row. And this is simple type of plays. Once you're in that bear structure, you get your another red candle, another short, etc. So in and out, but on that scale, that's pretty nice. So pretty crazy the way that worked out, but hell of a flush out. Really was. So anyway, it is what it is. There was, a gap when you look at a lot of different charts, depending on how you look at your charts. There certainly was a gap between these two levels, so we understood that. So it wasn't shocking. I know one thing I mentioned to you guys is that sitting at this level, I wasn't sure. 8,500, it looked obvious on the charts. I understood it. There was a gap there. There's a lot of reasons for it. You got the 21 weekly. You had the 200 day. There's all kinds of reasons. But what I stated at the time was I would love to buy this area when I was here. When I was here, I'm thinking, you know what, I would love to buy this zone. But what I stated at that moment as well was, but if we get there, I'm probably going to change my mind, right? Because how we get there is the key. Because ultimately, yeah, if you drift there eventually, and it's nice and orderly, and it's in a channel or something along those lines, okay, great. You break the upside of your channel. Let's roll with it. I'm happy to go. Or I'll take a shot on support, something along those lines. But it's not that there's not plays in here. There are plays that are built in here, but you are catching a bit of a knife when it comes down like that, right? So that's what makes you a little bit leery, because ultimately, if you lose these 200s, these are the 200s on the daily, the exponential and the simple. If you lose them, now, of course, we're spending a little time here, which you should, but if you end up losing them, maybe come back and reject it, show a rejection, obviously you're opening yourself up to some other elements. Now, hold this again today. All right, we could talk about something. In fact, you can have an intraday pop back, which would be a daily swing failure type pattern, which would be quite bullish. And then we could talk about getting back to this level, fighting for this level, which is going to be a battle, right? There's some battles here, and you got a lot, and then ultimately this level. I mean, until we regain this element here, now you're back to that. You're still in that bear scenario. I mean, ultimately you're going to look to fade anything that if it doesn't come strong. What do I mean by that? Let me give you an example. So let's just say we go down to a 4 hour. These 4 hours rolled over. If I come back to this area and I just grind my way up, and I get something as simple as like a overbought looking stochastic, of course I want to short that, right? Any of these exhaustions I want to short in this type of situation because the trend has been down. So basically, if I get any indication that I should go ahead and go short again, I'm going to actually jump on that until it runs out. See, right now, although we'll talk about a few scenarios, it's just not a clear path when you have this heated of a pullback, right? It doesn't matter the reason. Is it coronavirus? Is it X? Is it Y? Is it Z? It doesn't matter. What matters is when something's trending, it's trending. And just roll with it. It was the same thing when we were headed up. I said the same thing. I'm not looking to call specific a top, right? We ended up talking about different areas. The first one actually was on the way up, which was this one. So it was impressive that we went back. I mean, that we made it past. That was actually nice. I know guys that completely just drilled this top perfectly, and I was on board with that idea as well. I didn't drill the top, just so you guys know. I got out around 10.2-ish in that range, which was pretty good, I thought, considering, where we started with some main pivots back here. But the idea was I'm not so interested in getting perfection. I just want to make sure I am involved if it does continue, right? So we could continue lower, but obviously what happens is you get into these situations like right now in the low time frames, they're trying. So I monitor it. I mean, really, I do go into low time frames with such high volatility, and I'm looking to play the low volatility, low time frame moves, high volatility, so that I'm in a position to make sure I can capitalize and not get caught off sides one way or the other. But for the most part, things have obviously been down. I took one long total, right? I think I took one long yesterday. I seen some other guys that told me today on Discord that they have been taking mostly shorts, maybe 1, 2, 3 longs at most. And yeah, that makes sense. I mean, look at what's gone on. Doesn't mean there hasn't been. I know some other guys that specialize in counter trending, and they've only been taking longs, and that's the beautiful thing about trading, right? So if that's your specialty, God bless you. And obviously there's some good things going on there, but I do see. Let's see how this day plays out, right? In a few hours, I could obviously see the potential of going long here, right? Even right now, in a very low time frame, the bulls are trying to make something occur. So we'll see. 15 minutes, a little heated, but I'm not looking to try to predict the low time frame on a stream like this because it's not going to help you much by the time you might watch it tonight and say, all right, well, great that he was talking about something at 11 a.m. Eastern time. But ultimately, we did close the gap this morning, which was nice, right? So let me just kind of get into that real quick. We could talk about a few different areas. So I'm not the biggest gap guy to begin with, but why? I mean, ultimately, we have a gap up here from right there, right? See this gap? Does that one not count? And that's from August. It's a breakaway gap, obviously, but the idea is that all gaps don't fill at all. There's gaps from the 1930s on the Dow. We have a gap just recently from the Dow that won't be filling anytime soon, etc. So same type of thing is that, look, you did fill this gap right now, finally today. That just happened. So that has potential. When I see that, what I start to look for is like a swing failure type pattern. Say, all right, well, maybe a gap filled. Then it could be relevant if I filled the gap and then I show myself a swing failure on some level. Let me give you an example. If we go into like it's a 4 hour. Now you made the lower low. Let's see if it's higher. There's potential there for it, and really it would be on the daily. You would have to see a reversal on the daily for that to occur. But anyway, regardless of that, you do see this. You see your 200s on futures are a little bit different here. So futures have a lot more to climb. It's also the end of the month, so we'll talk about that in a minute as well. So today's the last day for futures, monthly close. Tomorrow's the last day for spot. So that's relevant. We're going to kind of take a look. Of course, the Bitcoin monthly wants to hold the 21 month. That would be key. Obviously, 89 week. But when you're up against the end of the month. The 89 week doesn't matter as much because really the 89 week is just simply a front run of the 21 month, because usually you're not looking to wait till the end of the month to get your information. That's a long time to wait for some data. So here we are. We're in between. What does that tell you? That means, look, you got to wait. We got to wait for some clarity. I need to pop out on this side and base off. I need to pop out on this side, base off. Very normal action. You see here? Come in, wait a few days. Uh-oh. All right, get outside. All right, now I see we're going to drift down lower for a little bit. Same type of thing once you cleared back up to the upside. All right, it makes things a little bit more clear. Now, of course, you might range and drop back in, so it doesn't just give you an instant play. But you can see if you go back in history, once you get in here, you want to clear them out a little bit and get yourself going from there. So there's other things going on that we're going to talk about a little bit. I don't want to make this the longest video in the world because I do have to kind of keep an eye on the price action, but I do want to speak about a few things, such as the contraction we're seeing on the higher time frames, which is certainly relevant. So anyway, we close the gap, so that's interesting. I believe there's another gap though. So I mean, if we start to see some bearishness, and you want to talk about closing gaps right here, right? Is this a gap? Yeah. So this is another gap. Again, you don't have to close every gap. Maybe this is a breakaway gap, right? This gap did not close. I don't care what anyone tells me. Everyone was posting the same thing yesterday. I didn't know what they were talking about. I don't care about gaps that much, so I didn't really pay attention to it. But I seen people saying gaps closed. Didn't understand what they meant, because pretty clearly it was not, right? That closed today. Same thing here. There's a gap right there. What about that gap? That one didn't close it. So what? This little pullback that we had there didn't get the gap. You either closed the gap or you didn't. In this case, it did not. But again, I'm not a gap trader. I don't really care. You could say that's a breakaway gap. Awesome. How are you labeling your gaps before they happen? I don't know. That's a hindsight type of thing to me. So I'm not sure why people try to do that in real time, because you're just guessing if that's the case. But again, I know people that trade gaps. I used to trade some gaps on an intraday basis in stocks. That was an effective strategy. What you could do the first 15 minutes of the open, etc., and try to look for a couple gaps that either might fill or might give yourself a little bit of a breakaway intraday. But ultimately, it's not my thing anymore, right? So, but it's still interesting because yes, once you get close to them, this was my thought process yesterday, which was, look, when you're that close, yeah, you're going to go fill it for sure, right? And that's what happened. So you ended up filling some gaps. Good job with that, or at least that gap one. But if you lose this area, you got some trouble. I mean, that happens to coincide with one of your 200s right here anyway. You lose that, you're probably bringing yourself back into that particular mode. I do have another futures chart that I might as well show you. All right, this one looks crazy as usual, although it is pretty damn awesome. This is my CME matrix, I call it, but this thing we've had like perfect for so long. I will just get rid of these moving averages. We got enough to look at here. I want to clear the volume. I might show you one thing on volume that you're going to have to take my word for. But basically, we had this thing drawn out, my God, 4 months ago. This has not been touched, right, in all that time. And this was the level that I found the most interesting, right? This happens to be the largest volume week in futures history. Let me show you. I hate to say that thing, and then you guys have to take my word for it. So you see this volume, how ridiculous it was? Well, that was that candle right there. And, extreme volume I do take an interest in. I also take more of an interest in futures volume because I trust it, right? I can't trust the volume on any other exchange at all. So futures volume I can. So that is that. All right, so here we go. We got that looking, staring us in the face, and this was the zone that we were looking at going all the way down during this path. Started to get into the zone. Okay, you popped out for a bit, back in. This was a huge linear trend line that we had intact. We based right off it, never once broke it. Keep in mind, again, we had this thing drawn back here, right? This was the week we drew it in September. And it contained, held. We knew that we had this backup way down there. Unfortunately, if we lost this guy, which certainly, again, if you lose this guy could come into play, but that's scary territory that you don't really want to think about right now. So we'll play it station to station. And again, same thing. I was telling people at that time, like, look, man, don't think about this one until you lose this guy here. So it never occurred. It held. It also held the 89 week, which I don't have up at the moment. If I could just bring it up just for a second. That is, oh no, that's right. Excuse me. Futures, you were having that consolidation under the 89 week, but with it also right under 21 month, that's like a professional move. So you see that on professional exchanges a lot more than you do in something like crypto. Crypto likes to hold that level when possible, but we also see the 89-week do a traversing on spot. So forgive me on that aspect. The whole point was dancing around the 89-week, which is where a lot of your consolidations will happen. Why? 89-week. It's not some random number. It's a Fibonacci number, but it also is the front run of the 21 month. I mentioned that earlier, but that's a key number for big institutional players, things of that nature. People like to buy at or just under that level if they are going to buy and accumulate. So it's something to watch. Happens to be around that 100 week as well. The 100 week SMA. When you get into those big numbers, they're pretty similar. So everyone uses their own thing, of course, but they're in the same ballpark. So either way, you see how we kind of worked our way through and then burst it out. So we did burst out, etc. Good job. But the only reason I want to focus on this, I want to actually clear everything. Because you see this candle? This is the one I'm going to go back to. Let's just clear it all. So this is the candle. And now I'm going to have to bring it back. Actually, let me just delete it all. Don't worry about that. Because I do want to give you this. The top side of this guy right there, right? So you could see how interesting this top side is if you watch, right? So you had some rejection in here. Once you gained it, you lost it. Rejection, rejection, rejection. Pop back out for a while. Rejection. It's always playing a part, right? And then support. And now here we go again around that top side. So ideally, bulls aren't going to want to drop back in there. Now, they may not be able to help it, but it's not something they'd like to do. So you see this candle right here. This candle always made sense anyway. That was your last pivot. You don't have to take the whole candle. Perhaps you want to just take this part of it, but it doesn't matter. Let's just look at the whole candle for now. This range is one that wants to hold on close, right? So really, I can take this a little tighter instead of looking at the top side here and make it a double zone like this. Actually, I prefer to hold the open, right? So that was the open of that candle. Take my word for it. But I'll show you in a second. Which is right there. See, that was the opening of that candle. I prefer to hold that. It's just cleaner, right? You start getting mixed in, that you don't want to do that dance, right? So ultimately, that's a key level. If we go back to that daily, you can see we're trying to fight for it. Good news is closes in 5 hours and 50 minutes, right? So there you go for futures. It's a level you want to hold, and then you could try to say, we'll look at the same thing on spot, but then you could say, all right, you know what? I understand it. It's a terrible week. At least you held that pivot for now. You could try to base something off of that. If you did that, good on you. And ultimately, we'll start to see what we can deal with next week if there's a push that's there. Now, there are things and elements there. I mean, we could find bullish cases. It's just, I don't want to tell you like, hey, here's the bull side, here's the bear side, and just go completely down those roads. The reality is we do have to watch these things step by step when we're in these territories because it's key. As we mentioned, black swan, white swan, what's the difference? I mean, white swan is when something becomes like absolutely expected of it. The black swan, you say it's unexpected. Well, it was unexpected, but now we fully expect interruptions because of what's gone on with something like the coronavirus, etc. Again, play your charts above all else, but you're still dealing with something that has to be in everyone's mind, and therefore the charts are going to reflect that. So we're going to continue down that road. Okay, now really quick, I will go into the month. Bring up this guy again. All we're looking at now is something like the blue 21 month. That's nowhere to be found. So from a monthly perspective, you're okay, right? This is not a picture of health, right? There's nothing pretty about that month, but you did go ahead and you at least you took out the high of this previous candle, so you made a higher high on close. Obviously, it's a little tricky when you start getting into wicks and whatnot, but you eventually made the higher high on the wick as well within this month. Obviously, that is not a pretty candle. But it gets a little strange when you start getting into monthly candles. I mean, the reality is you're holding the top side of this massive candle still. So when you look at it from that perspective, what do I mean by that? Let's just look at the individual candle real quick. I'm not saying, hey, things are still bullish or anything along those lines. What I'm saying is, yes, that's a very bearish looking candle right here. But you're still literally in the top 30% of this entire move from the previous month. So it's pretty hard for me to say, oh, hold on a second, I've retraced 30% of last month's candle. And let's be fair. Let's go to the open and let's go to the close, right? So from that perspective, you would say, yeah, about 30%. of the open to close of that. Now, if I still go, high open to the high side of it, I'm looking at 50 something percent. That's okay too, but this makes sense. So look at the individual candle. You say the open of the candle to the close of the candle. And so far, the damage is 30%. It's not the end of the world. It's almost showing a bit of a wick off the 382. Getting back above 8,900 would certainly be better. But where does this become a problem? It becomes a problem, or at least a concern, if next month you take out the low of this candle. Like, okay, now that's scary. Ultimately, that would be something that's a little bit more worrisome because the reality is when you're already talking about a monthly candle, people could say, "Oh, well, I'm looking at the 3 month." You know what I mean? And that doesn't close till the end of March. Right? Well, by the way, maybe they have a point. Maybe by the end of March you're back up here and things look swimmingly great, and you don't have that issue at all anymore. So we just have to kind of wait and see on that one. But anyway, with the monthly, the other thing on that monthly is you got some interesting things. I mean, first of all, we got to see where we close, but it looks like the 10 simple is like 91.78. You would need a hell of a rally to get there, so you might lose your 10 simple, which you gained last month, so that's not good. You don't want to give that back, but you are holding the 8 exponential. 8, 9, 10, these are things all different various players like to use, so that's common, but it's a mixed bag there. It's good to get a little bit of a rejection off the 8 if that's how it holds on. Of course, there's 5 hours and 50 minutes left in a turbulent day, so where we end up is still to be determined, but just kind of peek at that. Obviously, it looks like the 21 is certainly safe for now. If I end up being wrong about that, I apologize, but it looks pretty solid. But anyway, so that's the key with that element. I'm going to go ahead and switch gears a little bit, see if we can speed this puppy up a little. I did want to look at, let me go back to spot, or actually we can use MEX. So the scenario is not entirely different when we look at, we'll look at the weekly really quickly. Let's clear all this out. So monthly looks very similar on spot that we just talked about. We're just seeing if we have any discrepancies. You got a 2-week closing as well. That's a bearish engulfing, not pretty, but you're losing that 8, not great. Might hold the 13. Might regain the 8. If you hold that, not so bad either. If we go down to the weekly, this is the one that you want to fight for, right? So here you are with all this going on here, and you're looking at a situation to where the weekly seems to be at about 87, 57-ish, 58, in that range. So let's say 87, 60, something along those lines. Of course, it depends on the exchange, but you want to hold that blue 21 exponential. I mean, that's something that once you regained it, fought for it, had a pivot week over there, right off of it, nice burst. You certainly don't want to just give it back. It's just not a good look, right? You're opening yourself up now to that white 55, eventually possibly that 89 test again. It's not a good look at all. Now the moving average, the dynamics, right? They look good. Right? When I say dynamics, we're talking about the moving averages. The structure's good at the moment, right? You see the lower, you got your lower moving averages that are in a bit of a downward slope, which is not good, but of course week's not closed just yet, but at the same time it is what it is. You're really closing some bubbles, but the weekly time frame is not terrible at all. You're still fighting for that support as we mentioned, so if you can hold off this guy and close, as an added bonus, you'd really want to close above that 87-60, call it, range, and then at least you could try to start holding on to some things. And keep in mind, when we're given the bull scenario, all you're doing is holding on to things at the moment, because it certainly doesn't look rosy, right? So, but same type of thing comes into play on the 3-day. You do see, like, all right, look, you are showing certainly a downtrend, but you are trying, and this becomes a little bit more clear, to hold this particular range. It's a bigger range when you look at it on the 3-day, but still you have your top side and your downside, which gives you all of this. So the idea is bulls would like to hold this area and maybe pop back up at the other side. Even if you do a bigger ABC where you say, all right, well, B side up to reject somewhere maybe in here, and then maybe we could talk about whether you're going to see something follow through even lower, or evaluate that at that point. So we'll kind of see. But this could change. It can change, right? Now I'll explain how that'll work. When I say change around, meaning obviously it went quite bearish quite quickly, but you're trying to fight for these 200s. Now, how could you try to play this? Well, if you hold these 200s again, I shouldn't say certain, but usually you'll see some players try to go ahead and go for a play on those 200s because it would show that there is an element of support or fight there, and that should get you a bounce, right? Daily scale type of bounce. Now, you lost the bottom side of this guy, that 9100 to 9200, call it 9170-ish in that range. That one might be it, right? You might not be able to get much higher than that over here. But if you clear that, of course, you're just basically going to your next level. In this range, you have another fight. Let's call it in there. You're right back to that 95, 9600. That's going to be more of a pinch for sure, right? So when we spoke about that earlier when we started the particular stream, and you would like to get your RSI up there just to muck it up a little. So the bulls, in my opinion, what you really want to do is just get into the fight. Right now, you're not in the fight at all. That would start with a hold of both of these today on close. Maybe, by the way, it can bounce intraday. I mean, this is a setup that I've seen bounce for sure. So I don't want to say that it can't happen today. It can. But ultimately, whether it's today, even if it was over the weekend, which, of course, we know weekend rallies are not the fondest. Usually they get faded, right? But the idea is whether you get back in this range to give some opportunities for some shorts or back here for maybe some better shorts, so be it. And then we have to see, evaluate how things pull back. Don't think, when you start hearing people that say, we're going to go up here and then down there and then back up. Come on, man. They don't know anything. If they get it right, they sound like a genius. That's great. But if you're telling me that you really believe that this guy absolutely knows with certainty that we're going to bounce up to this level and then we're going to come back down to this level. I can paint that picture for you too, and I'll seem like a genius, right? And I'll come up and get my cloud after and say, and then we're going to go to this exact level right there. We're going to close the gap. We're going to pop the ABC. Great, it might work that way, but the idea is to have a plan of some sort that shows that. Great. But have some tangents to your plan, right? So what's the tangent look like, right? The tangent is, okay, well, if I come here and if I start to see some exhaustion here, well, I'm going to short it again, right? If I make it past here, great, perfect. If I go with some gusto and I see some exhaustion here, same thing, I'll short it. If I pop through, I'm bullish again. If I get back up to this range, guess what? Life's good. I'll be looking for longs if that's the case, right? You guys see me draw these things all the time, right? Well, except that one would be green. Let me just show you what I'm talking about so we don't I don't want you guys to think I'm nuts. Do I have this chart up somewhere? I've had this chart. Again, this has been months, right? You guys seen it on the stream months ago. Let's look at this guy. Sorry about the mess. Okay. And every time you change the time frame, this gets messed up. This is supposed to be equivalent to that line and not so large. Okay. So we've had variations of this forever, right? So here you go, bounce, bounce, bounce. And you have these up and down arrows because, yeah, that's where there's some points of interest. Like I don't have to claim I know. I'm going to watch for a play and then maybe take it to a lower time frame and play off of what just occurred. So when I hold this area, yeah, I'm going, come back down for a test. Well, let me kind of evaluate. Oh, local low, good. A little bit of a bounce again. Maybe you get caught on that drop off. Maybe you didn't. It doesn't matter. The idea is you're playing an edge that's going to work more often than not. And then, again, I have not touched this at all, right? This has not been touched in months. And you're in a situation to where finally start to see a little bit again. Bouncing ball look. We all know that look. It's getting a little weaker. Very simple market structure with lower low. And then we came back into that level. Obviously, the horizontal is more important than this diagonal that we're looking at. But still had it marked off. If I put everything on the same page, you're going to have a picture of this and something crazy like this combined with these boxes. And you guys are going to change the channel pretty quickly. But this is fine for now. Again, decision time there. I don't have to assume that I know the decision. And then what happens? When you break, you get a rejection on that next candle, and that gives you what? Down to your next level here, right? And you're fighting for it. So there's a little bit of a battle here. You could see that traversing type of action. Of course, bring in your horizontal that you find important on the time frame that you're working on and work from there. That's going to always be key. But you want to have a game plan. So the whole reason I brought that up in the begin with is that, yeah, don't think you have to absolutely know. Now, on a higher time frame, of course, right? You might have been entering a short up here, and then you're not going to even have a stop until you probably break this particular level, as an example. So you're just watching, and that's fine if you're living on those time frames. But if we're talking about active trading, right, the active trader should be actively evaluating as well, right? Because just as we talked about the play that we took, which was from here to here with this rejection, a bunch of things came into play. RSI started giving us shorts all over the place. You start to see stochastics that's just showing you that no, this is super bearish, and even more so here. Just re-upping on that to show you that no, this is bad news when you curl up like that and lose it again. So that's the idea. Just have tangents, meaning other plans just in case that, hey, this shows you some more bullishness through at least that level to the next one. Okay, then we'll reevaluate up or down from there, and that's perfectly okay. I mean, that's how it should work. I promise you, there's no one in the world, right? You don't have any $100 million traders that say, hey, you know what? It's going to go to 10,000, then to 7, then to 9, then to 6,500, then to 12. And I've already placed all my bids and my sales for the next 3 months. It just doesn't work that way. It's silly. You have to get more data. Remember, we're using technical analysis, which you can be effective with, right? You can utilize it for an edge, but you're still trying to predict price from price, right? And all these tools that we're using are reflections of price as well, and how they move, and the momentum and the trend and all these things. It still all comes down to the fact that we're looking at the same data. We're reading the tape differently than what they did back in the day, and that's it. And we're trying to make calculations off that. And really what we should be doing is saying, all right, who's getting caught, right? Where's the loser going to be in this situation? And that's not to be derogatory. It's just to make a point that if the loser is going to be caught looking for longs, well, then, of course, if you fade that guy more often than not, you're going to do pretty well. And that's what happens. So you see that occur. It doesn't mean you have to be perfect with it and say, oh, I know that these guys are wrong. No, that's not what I'm saying. But we can make a game plan that kind of points that out and say, all right, this looks like another lower high. Let's get in around that region and then get in on this next wave down. And that's the kind of game plan you want to start to make as a trader. And then you do that 100 times, it works out, and you get paid. Sometimes you do it, you get caught. It breaks through your area. You take your loss like a man or a woman, get out, move on. That's okay. That's why you have stops. The first stop's the cheapest. So be a professional, take that stop. Okay. Other than that, let's see. Did I want to speak about anything else? I mean, we need to let the dust settle on this stuff. That's why I'm giving you a lot of different options. Let the dust settle. We'll get a clear path. Sometimes we get that directional bias that we love, right? We had a huge directional bias from here to here. We had a directional bias from there to there. And then things get hard again. And we talked about that. Hey, things get hard. I don't know. Right? Let's see. Because you could have based here and did one more leg. That happens a lot, right? You can't, by the way, if you think it's not possible to base here and come up here and make a higher high, I don't know what to tell you. It's just, of course it's possible. I mean, there's other events that are going on, things of that nature, but of course it's possible. You start seeing, show me some insane funding where you have bears paying extremely. It doesn't have to be that way, but I'm just making a point that if suddenly that happened, then the market's going to react to the fact that people are exposing themselves. And in that situation, they say, oh, you've just exposed yourself to being potentially liquidated at X amount. Oh, okay. Well, then we'll get into unison and move to that number to clear out these over leveraged players. So if you see a path like that, and sometimes what happens when that begins to occur is you'll see something like that occur where you got over leveraged players as an example. Now, by the way, I do want to talk about that, but the point I'm making on shorts is that if you get over leveraged players, right, and then behind it you get people that are still becoming more short. I'm not going to show you the funding right now because I don't want this video to go any longer, but this was a perfect example. Here you had people that were very short, right? Then this occurred, and like a gift from the gods, people were even more bearish, and they were paying to be short in this region. Like they seen this as as a ceiling. Which, by the way, at one point I said back here, I made a video. I said, oh, this probably will be a ceiling. But then when we got closer, I did point out that, hey, you know what? Bitcoin likes to run through ceilings at times, just the way it is. Well, I think it's something to do with the fact that you got so many hodlers, believers, etc. So that a lot of times when you come up, if they happen too far, if it just happens quickly, it'll drop, retest, that backfill and go. But over time, if it goes, if you clear some time out like this did, a lot of times they'll just run on through a ceiling like that. So the point I'm making, though, is that so many people were short. I mean, they were paying to be short in this situation, which was insane. The fear and greed index was showing like extreme fear. It made no sense. I have posts. You can look them up in that area. And I said the same thing then, that these people were going to get squashed. I have no idea what I'm looking at, that people were more bearish at 5,000 than they were at 3,900. And that was the exact situation. So that's a dream scenario. That's an exact situation of find the loser and everyone there. And if you want to know who they were, it's anyone that doesn't have a tweet before uh, May or April of 2019, and there's a lot of them on Twitter, and they all deleted them. Just, oh, I'm just cleaning up my Twitter. No, you're cleaning up the fact that you were calling everyone stupid for longing this. Meanwhile, those guys got busted and decided that people have short memories. Let's just delete every tweet we have and use it as an excuse that we wanted to somehow clean our feed, as if someone's going through your tweets for the last 5 years. But regardless, doesn't matter. It doesn't have to work out that way, but I will bring up something on funding. The other thing we did speak about on funding is we were back here and people were paying to be long, right? So they were paying all the way up for the most part. And what I'm trying to explain is like, look, if you're paying to be long, that's one thing. And it's something that can be devastating, right? You could certainly get beat for that. But when price is climbing, who cares about paying to be long? Why would I care about paying? It costs money, right? I care about it a little bit, but at the same time, other than the fact that I'm worried about being exposed long, why do I care about paying for a leveraged long if it's paying off like this did? This was a 60% move, right? So while it's climbing, it's not the end of the world, right? So that's something we got to keep in mind. What happens when it's a problem is when you're paying extreme amounts and price is now what? Bleeding. So you get the situation where you have a bleeding price and people are paying to get long. Now you get people that are trapped, right? So first thing you have to do is trap some people. So they're believing. And then you'll see something like this pop back up. Funding gets out of hand again, and then boom, they set the trap again. Now more people are trapped. They don't do the professional thing and just cover. Instead, they are going to stay that way, and you get into, or by the way, some of them do cover, and that kind of feeds into it. So you just get into a situation to where now they have to sell to even exit, not get liquidated, and it becomes a self-fulfilling prophecy of how that occurs. So paying for long is one thing, that's fine. You can pay for shorts. By the way, in this situation, if you want to look at the funding, people were absolutely paying in bunches to be short, and it works out if the crowd is significantly with you, it'll be okay. But at some point, the party's over and you get caught into a situation like this and you get that dump off. So we did see some of that. Obviously played a role finally. Again, a lot of people paid to be long all this time, did quite well, but eventually you got yourself into a position to where that just wasn't going to work anymore and you get the dump off. So again, I said dust needs to settle. That is true. What would I need to see? Well, one thing you can do is you start to look at the fact that this weekly, I want to go back to the weekly and I'll clear. Let me get rid of all the moving averages. We'll just look at the price action here. Now, if you want to see this guy start to move, I'll even clear these yet again. What I'll do is I'll say, all right, well, let's go into the area that we need to hold, right, which is this one. But then you can lower your time frame. Let's look at something like, let's say, a 12-hour. You don't want to go too low with this time frame. But this was the weekly hold. When did the week end that we're looking at? I apologize. I should have looked at that. That was here. Right there. And let's see. I think it's the 26th, right? Let's see, 12-hour. So what I'm looking for here is I'm looking for that candle that ultimately ended up being the, all right, so I'm on a 12-hour chart. You can go to any chart you want here, basically, right? So you can kind of see how this came into play. So this is the area that we would like to hold the top side of, but you can kind of get in now to a lower time frame chart like this and get more specific. You can see like what life above here was okay, right? Life below some rejections, right? So let's just say we could bring it up. Maybe even bring it up to there. On a 12-hour scale, now of course we're already into the last day on the futures market, but sometimes what you could do in the last few days when you're trying to see is like, hey, are we going to pivot off of a weekly scale, bring it down to like a 12-hour and focus on that exact time frame that you were looking at back there, which seems to be right about here, was that do or die type of point. And with that said, even if we scroll up, we can see we almost got it here. So let's just say like that, right? So you fell into this area, you're holding it. So what would I like to see? I would like to see a 12-hour close above this. So if I get that, Then I can open my mind up to something coming back first to this level, right? You do want to stay local first when you're looking back, but we do want to also realize like, hey, right here we had this situation, so that's gonna be your first level on a 12-hour, and then of course in here, this was your decision time here, and we just talked about this level multiple times today because it's key. So that would get me in a position where say, all right, you know what, the 12-hour has a chance, and that's going to coincide with this guy finally crossing the 20 and trying to get something going. A lot of times they'll pause at this 40, pause at this 50, pause at that 60, and it'll look something like this. If you're going to go, it might roll over here. It might roll over here. It might roll over here, right? And all of those would still be good for a bounce of some sort. Now, sometimes when they're just going to go, even better, right? Pool control, that would be nice. But ultimately, you might see something where you get this rollover, but you get the point. I can get rid of that last one so it doesn't look so crazy. If you get Stoke going, then it has a chance, and that's going to mean a close outside this region. So if you're looking for something, you still have traps here. Again, you could bring the same thing. Maybe you don't like to operate on a 12-hour. You get a little bit dicey when you start getting on a 4-hour. So let me go to the 26th, which was right there. All right, so I'm looking at this region back here, and it's the same type of level, maybe not as high. You could try, when you front run, it's okay to front run. I'm just making marks everywhere, showing I don't know how to use this tool. But when you front run, you got to understand that you're front running, right? So there is a chance here that you're going to be wrong, and that's something you have to prepare for in your TA. Say, all right, look, I'm doing a little bit of front run, but if I see this guy peel back, I got to jump out and understand that, hey, I tried to jump my signal, and therefore there was a little bit of risk there. And you have to protect your money first. That's always the key. Your money is the most important money, not the money you could make. Like if I could make, if price goes to 88.50, I'll make an extra 15 grand. Okay, great. That's still not as important as the money I could lose by not taking the stop that I should take. Even if that money that I should lose is like 7 grand, right? It's not a risk reward scenario at that point. Your stop is your stop. What do I mean by that? So if I say, hey, my stop is 86.40, okay, when I get to 86.40, I can't think, well, hey, if it popped to 9,000, I would make 15 grand. No, you can't think that way, right? You still have a stop. You set a stop for a reason. Trust your stop. Then after you sell, if you want to go home and do some research and say, hey, you know what, maybe my stop was wrong. Do I have to get better with my stops? Should I not have taken that position? That's the learning process, and a lot of that you do have to do with yourself. No matter what you're taught, a lot of that is still evaluating and saying, what am I doing here? What am I missing? I'm probably missing something small, etc. And usually it is that, but it still has to be something that you do with yourself to get yourself in the mindset of understanding that, hey, I respected my stop, because ultimately you're not going to have me sitting there, whispering in your ear, yeah, you definitely should buy it out, right? Doesn't work that way. Oh, no, definitely sell. It doesn't work that way. You don't call me up, Mr. A, oh, you with your kids? Oh, I need to know if I should sell right now. Hold on, let me pop up my phone. It doesn't work that way. It's not realistic. So you got to get into a situation where you can begin to trust yourself, and that takes time. But ultimately, you do have to still trust yourself even from the beginning. Set a stop, stick to your stop. Now, if you lost money on that trade, hey, you paid for that lesson. Study it. Get it? You bought the course already. You understand what I mean by that? Meaning, if I take this trade and I lose, if I lost a grand, whatever it is, okay, I lost $1,000. So this trade cost me $1,000. So I paid for whatever lessons here. So I better study it. I better look. Where did I enter? Why did I enter it? Was there sound reasoning? Should I have entered 10 minutes earlier? Should I have waited, right? What was I looking at? Did I evaluate it correctly? Was my TA sound? Did I use a play that should be an edge play, except I did it wrong? These are all the things you need to go through. And slowly you'll start to realize, like, usually it's like, oh, wait a second. I didn't try, give you an example. If I want to be short the market, right? I want to short, give me a box here if I could. Where do I want to short? Do I want to short here? No, it might have worked out. Remember, in trading in general, just to show you guys something, being right or wrong is the key, always. What does that mean? Well, in this short, no matter where I enter, I'm probably going to be correct because it's a hell of a downtrend that started. But it's still helpful to do what? Should you be trading the breakout? No, 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 no. That's not what it's helpful. What's helpful is the short strength. And it's not strength. We say strength, but really you're shorting failed strength, exhausted strength, right? Well, why is it exhausted? Well, because you have an idea that this looks like what? A short. So you've already made that decision to go long or short based on your other TA. But once that occurs, now I prefer to see some exhaustion, right? So I'm looking to enter in these type of situations, well, no matter what you use, right? It's up to you and what you use and what your tools are, or how you like to use it. If it's moving averages, if it's the special indicator or anything along those lines, you're looking to do that. Maybe it's an exhaustion candle, right, like that, and then you see that price can't make its way back, it starts to roll over again, right? Maybe it's something like this here. But regardless, I'm still shorting some element of exhaustion, because if I short here, right here, you can do that, and we see that it ends up being correct still, right? But here's where the pain is. You short here, so you have this huge down candle. This is what always happens. You have a big candle, and someone says, oh, I want to short. All right, well, you get a little bit of a low time frame swing failure pattern right there. It starts to pop up. Your stops come into play. Like, where was your stop? Maybe you now are shorting it down here. You get a second low time frame possible swing failure pattern. Even if it's not, it gives you a bounce. So you're now trying to short the breakout here. You're probably setting your stop right over here, right? Just beyond a swing on a low time frame. And this thing pops up and you're out. And that's what could be more disgusting than seeing that afterwards, right? You're going to feel sick to your stomach. So you do always want to try to say, all right, look, I am creating some element of a directional bias for this trade. And it doesn't even matter. Maybe you're on a very low time frame. Let's take it to something like a 10-minute and just delete everything and start over with this idea. Now remember, I'm saying you've already formulated your plan, right? And you already know you want to be short. So if I'm shorting something, if I say, all right, well, look, I'm going to find another kind of like breakout situation. Do we have some sideways or something? Forgive me, I didn't prepare this. I just kind of want to show you what we're talking about. And by the way, I'm not cherry picking something that's going to make sense of what I'm telling you. I'm actually just cherry picking some sideways is what I really want to find. Okay. So this is what I want to find. Okay. So in here you want to short. That's great. But here's what happens to a lot of people. They decide that they want to short. Now this one works out as a breakout, we could see. So I didn't choose the best one anyway. But a lot of people will decide, they'll see this, and it's not that people wait for the breakout specifically. And sometimes you'll see a hunt, which I couldn't find. Basically, I'd rather find that. Oh, this is perfect. Okay, sorry. So let me just use this one, guys, because we're trying to find something on low time frame. So I apologize for the time that took. But so people say, oh, I want to be short. All right, and it's bouncing around. Look, I agree. This looks terrible, right? But the idea is this. If you see this level, here you are, you're trying to short this level. We see there's a couple scenarios. Maybe you held off on that one, but maybe you tried to get short there again, where you had at least clearly one or two that snap back and bounce. And then this one probably is the hunt that would have got you out of your short completely, which is painful, right? What I'm saying is this. Even if you make that decision to short, if you short the failed or the exhaustion, right? People call this strength, like, oh, it's strong. Yeah, okay, well, it's getting tired. So if you wait to short some sort of exhaustion, your chances of getting stopped out are minimized, right? Even this one, by the way, is an exhaustion. So you might have minimized your chances of getting stopped out, and so that you can catch that good play. Now, by the way, maybe you do get stopped out. Look, trust your TA again. Once you see that exhaustion come into play, jump into that one, okay? Here you get an exhaustion candle with some exhaustion on a momentum indicator. You already had a downward bias. Roll with it, right? And eventually it does pay off. But the idea is that you could see that you're much less likely to get caught if you're doing that. So just kind of keep that in mind. I get it. Some people are terrific at playing breakouts. Nothing against them. I know everyone gets mad when I talk about don't chase breakouts and things of that nature. Look, if you know what you're doing, what do you care what I'm saying anyway? Do what you do if you do it well. But ultimately, the point is that even if you see something like that occurring, if you get into the habit of looking to short the failed strength or the fake strength or whatever it might be, you're going to get yourself into some positions that at least give you a little bit more wiggle room on your stop. Now, if you're not very good at this at all, The other thing you can do is just, pick a higher stop. Your position size is going to be smaller because remember, you should be making a decision on your position size based off of where your stop is, right? So if you have a stop that's way out there, then so be it. Just understand that, because here's what happens. I want to explain this a little bit clearer. People will tell me a lot like, oh man, I had it right completely. I knew we were going down, but I got stopped out. Look, you got to pick a higher stop. That means a smaller position, right? So you say, I'm going to risk 1% of my account, 2% of my account, something along those lines. And if you're not very good at trading, keep it at 1% or even less. But start with a higher stop to at least give yourself some time to see if your play was working out to begin with, right? So if I got in anywhere around here, maybe I choose this swing as a stop just above it. Yes, that's a good distance above it. I get it. Maybe my position is half of what it would have been if I put myself into a closer stop. I understand that as well. But it gives you the ability to catch something as opposed to getting stopped and stopped and stopped and stopped out over and over again. So just little things like that that give you a chance. And then look, over time you might get sharper, and I shouldn't say might, you will get sharper, right? So you'll get sharper at these things anyway, and then you'll be able to sniper it a little bit better if need be. And by the way, you don't have to do this on the 10 minute. I just went down here for an example. Remember, this could be done on the daily, whatever it might be. Same type of situation can occur where you say, hey, you know what? I get what you're talking about, but I'm a high time frame player. Okay, same type of thing. Wait if you can instead of getting caught by these big swings. You see some type of exhaustion play out. So you might say, well, I'm late. You're late, but you got a clear move. You know what I mean? Things along those lines. Same thing here. We've seen bits of divergence come in. How divergence by itself should not be a sell signal, right? Sometimes it's a decent exit to get you out, but if it's part of your plan, then fine. Look for some divergence, have a play off of that, and then as you start to see a higher time frame type of signal come in, which there's a few in here, then that's where you say, all right, I'm going to go ahead and short the next test as an example. What might be an idea? It's like, all right, well, if this holds and rejects right there, then that's where I'm going to enter. Maybe you entered here, maybe there, maybe on this retest. It doesn't matter. At some point, you're getting yourself into a pretty good spot. That put yourself into a position to say, hey, I set my stop a little bit higher, and I was able to catch the majority of the move, even though my position size was smaller because I had a higher stop. And if anything, especially if you're in a learning process, it's going to allow you to stay in a trade a little bit longer, evaluate the ebbs and flows of the market when you review it, and kind of get yourself into a better position. All right. Other than that, last thing I might mention here is this weekly RSI, and then I'll let you guys go. All right. Not surprising, right? So, weekly RSI, we look at a few levels. Really anything over 50 with RSI is bullish, especially if it's uptrending. Below 50, bearish, right? Well, pretty much in general, this particular level here, which is, what is it, 54-ish, right? This is a level that consistently at 53, 54, if we look at it historically. Let's do one on 53 as well. Let's just do 52. It doesn't have to be so perfect, right? It's a level where you see, all right, you get up in there. Once we get above it, we tend to see price bounce off it over and over and over and over again. And you want to get caught into that bull mode. That's great, perfect, understandable. We started to see some positive things here because the same area that rejected, right there, basically it finally got pushed on through. Now people could say, hey, bear divergence on high time frame. Maybe that's true, but I don't like to take my divergence that far apart. But regardless, that's understandable. It's certainly a possibility, and they might be looking pretty good at the moment for those thoughts. But in general, my point here is that you are fading back into that range now, so that's a little bit worrisome. Again, week's not over, but it doesn't mean it's the end of the world. You're still at or near the 50 mark. You can bounce, but it is something to watch, especially if we bounce, as we talked about. Like maybe we do get a little bit of a bounce. Because holding these 200s, you could start to say, hey, daily looks a little bit oversold. If you hold the 200s again today, I think people could make that case. And then the question is, how far do we bounce? Well, if you bounce in and get rejected from these areas, not great, right? It's not the greatest thing in the world. So, just maybe we range for a little bit, etc. But it's something we have to keep our eyes on more than anything. One thing I was trying to see, I like to base off of, when I'm looking at these things sometimes, one thing I would like to see is if you get a big drop off, right? It wouldn't matter what chart I was on. The fact that we had dropped off right there was like the last chance of a pivot. Because sometimes making your way lower on RSI is a healthy thing. Let me show you what I'm talking about. Then we'll close this guy up. Let you get into my mind just a little. So here you are. Obviously, we don't need this. So let me just make that bigger. All right, so here we had this RSI just peeling back, peeling back, peeling back, peeling back. Okay, that's fine. And then this was a situation, if we go back in time with our hindsight and say, hey, look, whether it was look more descending, especially if we take the wicks, right? But you could see the closes, which is what the RSI was looking at, gave it a little bit more of a symmetrical view. It doesn't matter. I would agree that this was absolutely a descending triangle, but my point is these RSIs are based off that, so we're going to look at these levels here. And sometimes what you'll see here is the price, when you see that RSI working its way lower, you can create a little bit of a bullish idea off it and say, hey, look, just like a simple hidden divergence type of thing on a higher time frame. Say, all right, well, look, maybe we are going to put ourselves into a position to base and go, which it's a fine plan, right? We talked about something like that earlier in the day, where you say, hey, maybe we're going to base from this level to this level, and then if I lose that level, pretty bearish, and that's what happened here. It did get pretty bearish. But what I then like to do is to look back at this pivot point for my RSI, and I don't just want to reclaim it, right? Reclaiming with RSI, because this is an oscillator, it goes from 0 to 100. I don't want to just reclaim it. You could see what happened. You got rejected before it right here, right? And you did reclaim it, which was nice. But what I wanted to do is I want to base off of that area, right? I want to live above it and make a higher high. See, with RSI, you want to gain a level, show that you can hang out in that area, and then make that higher high. It's not too much different than when you look at the market structure of your price action. People, they misuse this RSI all the time. It's a beautiful tool. You just have to be a little bit creative in thinking about things that truly give you an edge with it. So that's what I would like to see, and it just didn't happen. So it is what it is. We're kind of back to that drawing board. I have no problem saying it doesn't affect me to say, like, hey, I got to reevaluate things now and see. That would have been nice, right? That would have been the easier scenario. It doesn't mean you can't base next week and start off and do something different, but you will see that happen a lot. You give you an example here, right? Here, that area was here last time around. I'll make a little arrow. It was right there. I can give you a horizontal. It was right there, right? So you want to see it capture and then come back and just show some pivots. Now, obviously, the last one was just a roaring example of a move, but you would like to see that where it just starts to base and base and base and base. If I go back to another chart that gives us a little more history as well, since I'm going to call this quits anyway, you start to see that same scenario as well over and over again. So before the breakdown, this was the guy that you were hoping was the pivot, right? And you say, all right, I would like this to be my pivot. And then ultimately, if we enlarge this a little, you end up seeing a little bit of a head and shoulders type pattern kind of play out here, right? See that? An inverse. But basically, you're in a situation to where what? You tried to get it, you just couldn't. You tried again, same thing. You're failing a bit to get there. And then here, and of course, I didn't draw that perfectly. It should be like that. A little bit too thick of a line there. So right there, you see where I'm at. That's my base. That's where we fell off. I wanted you guys to see what I'm talking about. So this was the drop off right there. You see price just goes all the way and does its own thing, right? But the RSI tries to make its way back, can't live above it. Tries to make its way back, can't live above it. Finally breaks up, lives above it. See that? Base above the same exact level and goes. So that's the idea. You know, ultimately, whenever, if ever, Bitcoin's going to start run for the races, you're going to see it above this level, likely base off of it, and then go. So that's sort of what we're waiting for on that. Anyway, other than that, I think we talked about just about, not everything, of course, but enough for today. And we'll reevaluate. And again, I'm hoping that I didn't see too many more of the issues after the first couple minutes. So hopefully we won't have any more issues and they resolve this issue. I know they're coming out to do a couple more things from Comcast on my internet. And if that's the case, I can get into the more active live streams, almost daily. I have no problem doing that. Anyway, hopefully you guys are good. Enjoy your weekend. Don't get too bogged down with this stuff. Do your research, etc. Prepare yourself. That's all good. But kiss your family. Kiss someone you love. Do something fun. Enjoy yourself. Don't get depressed. Certainly don't get down. There's always opportunity up and down, so it's all good. This is Mr. Anderson. I'm going to sign off. I do ask if you can to like. That would definitely help. Subscribe if you haven't. And enjoy your weekend, guys. I'm out of here.